Did you know that in financial year 2019-20, if you had less than 5% of your gross annual receipts from business in the form of cash and more than 95% through banking channels, and similarly, if less than 5% of your total spend for the financial year was in the form of cash, most of it was done through banking channels, that is above 95%, you were not subject to tax audit if your gross annual total receipts or total turnover during the year was less than 5 crores. So you had that benefit that if less than 5% of your receipts are in cash and less than 5% of your payments are in cash, you would not be subject to tax audit under the Income Tax Act till the time your annual turnover from business does not cross 5 crore rupees. Now in this year's budget, that threshold has been increased further to 10 crores, which becomes the threshold. However, an interesting point for you guys to note is that checks given to someone for payment, which are not account pay, are considered to be equal to cash and not through banking channels, which means that even if you're making banking payments, so you're making payments through checks, but those aren't cross checks, those aren't account pay checks, that is considered as payment in cash, not in the form of banking channel, through banking channel, and the turnover threshold for tax audit may actually be 1 crore for you. Now, how is your auditor even going to find that out? Or during, say, tax assessment, the tax officer comes back to you and says that, give me a proof, you have a turnover of 4 crore in the financial year. You say that more than 95% of your payments have been made through banking channels, receipts through banking channels, which is easy to verify, but your payments you've made through banking channels. Show me that all the checks that you cut out to people for payments were account pay or not. If you can't prove it, I will assume that those payments through checks were through, checks made bearer checks in the name of the person and not account pay. So you might actually be subject to tax audit, which means that please do not make any payments without crossing the checks. Or if you do issue checks to people, a good practice would be keep a scan, keep a copy of it, only to be able to show to your auditor later or the tax authorities if they do insist that you have proof to say that those checks were account pay and not otherwise.